Hi, this is Dave with Market Trading Concepts. It is Saturday, June the 9th, closing out the month for Friday, June the 8th, 2012. I'm going to start out this video with the US dollar index because it is my firm belief at this point in time that the US dollar index has been driving all the other markets. And what I mean by that is US dollar higher means everything else basically lower. Now that's a generality, and we're making generalizations, but I think it's pretty accurate. You know, we saw the US dollar euro relationship. They move completely inverse each other. And let's take a look at the weekly chart of the US dollar. The US dollar index on the weekly chart had a Darvish squeeze breakout to the high side, which you can see here, this signal here, and we've already hit the 1272 extension higher, and we have a possibility to hit the 1618 extension higher. This is a weekly signal, so everything seems intact to move higher on the weekly chart. Now, if we take a look at the daily chart, what you'll notice is on Friday, basically what we have is an uptrend, and the uptrend that you can see here in the US dollar index, when we pulled back down to support here on Thursday, everything else was going higher. So basically we found support here on Friday at the US dollar index, and then you would expect a bounce off of that level. So this pullback in the US dollar index was signifying basically strength, or was showing strength in strength in the euro, strength in other issues. So now the question is this trend over, or is it going to continue? Because we're getting some mixed signals across the board. For example, so this is the US dollar index. And if we take a look at the euro looks, the euro is weak, and we hit these targets on the weekly chart. Oops, we hit these targets on the weekly chart here, and we haven't really pushed lower beyond these levels. But if you look at the daily chart, which I'll expand out here, the daily chart was just rallying right into resistance. So we've had this downtrend, and a move back to the 21 period exponential moving average is a potential shorting opportunity. And then you can see that we found resistance here and we pulled off. So the question are the trends going to resume higher in the US dollar and lower in the euro, or are we setting up for a potential reversal? So at this point in time, these are just normal technical retracements, but what's really giving cause for concern, and I'm a little bit indecisive this week for the simple reason that if you look at the stock indexes, now I'm just going to jump around a little bit here because I think this is really the relationship that's driving everything. If you look at the stock indexes, we'll start with the Dow, which is where I usually start. You can see here that we were in a downtrend, and we talked about this level potentially holding at 12,062. In last week's video. That played out nicely, but I wouldn't take a long here. I'd be looking to trade with the trend, and you can see I've extended this downtrend here. This downtrend has been in place for a while, but I extended the line through here because I felt that it was relevant. But really I'm looking at this downtrend here, this trend line here from this point, and this point up here. And what you can see is the price action came up to test this trend line, and then it actually broke through. So last week we were talking about this support level potentially holding, but if it didn't, what we would do to capitalize on that. But then what you can see is this actually held. We were looking for a rally back into resistance, either at the 12,300 level, where we initially found resistance intraday, but ultimately around the 12,428 level, which is a 50% retracement of this low to this high. So basically what we had was we had this move here, we had the retracement here, and we were looking for support in here, but we were looking for it to really fail somewhere around there. Okay, so that's where we were looking for it to fail. So initially it would have made sense from a technical perspective to get short in and around here, either right when it hit that level or if it rolled over from that level. Now, because we're actually, we closed above this bar decisively. Okay, we closed above this bar decisively, this wide range bar. And then now we closed at the highs here on, I guess that would have been Wednesday. Thursday we showed some strength, and then what you can see is some of the moving averages are starting to roll to the high side, and then now we've closed above 12,428. I'm actually looking at this level now. If we're going to stay above 12,428, and we closed above the 21 period exponential moving average. So at this point in time, if we hold the 21 EMA and if we hold the 12,428 level, that is a potential reversal setting up. So I was comfortable looking at a potential short play into some of these resistance levels, but with the expectation that they would roll over. We have now effectively broken trendline resistance here, and we are now effectively trading above the 21 EMA. So if we get another day or two of strength above there and we hold this level, then, you know, all bets are really off, as we mentioned last week on the short side. So these are really tricky markets to trade, right? Like, we're looking at this structure of higher, lower highs and lower lows to stay in place. And, you know, we had a lower low here and we had a lower high here. But then when we actually came back around to test the key resistance levels, we just broke through there. So these are really tricky markets to trade. You really have to be nimble and you have to manage your risk. And if you look at, really the key point is, if we get above this bar here, then from a structural standpoint, we'll be set to put in a higher high at that point. So right now we have a swing point low. And if we put in a higher high above this swing point here, normally what would happen is it would even come back down here, maybe even all the way to the trend line, or, you know, somewhere higher, and put in a higher low. So that's one potential scenario. The other potential scenario is that we just, you know, we trade above these levels and we hold and we push higher. So staying above this 12,428, I think it doesn't make sense to want to play on the short side of this market. And at this point in time, I'm really just leaving it alone and looking to see what happens. The major resistance now is going to be 12,652. So at this point in time, it looks like a potential reversal taking place. That could change at any time, but that's kind of what I'm looking at. If we come back down and roll back over and we look like we're really getting weak, you know, to stay short, I'd want to be below 428, and to be long, I'd want to be above 652. But the problem is the concern I have is, even if we put in a higher low structure, then we could push below this and then push higher. So it pays to be really cautious in this area and just to see what unfolds. I won't be trading it except for day trading it and looking to see what happens. We're kind of at a key inflection point here. So that's all I really have this week. I just want to just take a look at, like, the Dow futures on the weekly chart, and you can see here all we're really doing is rallying. You know, we found support back down in here, and all we're really doing is rallying into resistance on the weekly chart in the form of the 21 EMA. But you can see here the 8 and 21 is crossed over on the weekly chart, and we're rallying strong right back into that level. So I think the key going into next week will be to take a look at if we're going to stay above those resistance levels on the stock indexes, and if we're going to hold support on the dollar index. So watching the dollar index to see if it's going to, for example, let's just switch over there. First of all, watching, you know, the stock index futures to see if they're going to hold the weekly resistance, or if they're going to stay above, like the Dow, for example, the 428 level, 12,428. If it's going to hold above that level on the daily chart, 428, and hold above its 21 period moving average to see if we've actually put in a reversal in the stock indexes. It almost seems like the markets are anticipating QE3. So if QE3 comes into effect, where the U.S. government tries to stimulate the economy and puts money into the economy, all that money that they dump into the economy is going to expand the availability of credit, and it is going to basically think of money chasing assets. No different than when you have cheap money in the mortgage market. For a while there, it really pushed up the prices of homes because there was a lot of availability of credit. It's cheap money. People are chasing assets. You know, they're buying things up, and that supply creates competition, creates higher prices. So that money needs to go to work somewhere. So if we look at, again, look for that in the stock indexes, you know, the major resistance on the weekly chart, the support on the daily chart to see which side is going to win out. It's kind of a tug of war there. And then if you look at the U.S. dollar index, to see if the trend will remain intact and if we push higher. So here's the trend on the daily chart. We held the 21 exponential moving average. We have a little bit of divergence here with the MACD crossing over. So it'll be interesting to see, do we hold support and push higher and break, you know, put in a new swing point high, break to new highs, maybe test this 1618 extension all the way around 8407. If that holds true, and you know, that relationship, if it holds true and the U.S. dollar pushes higher, everything else is, you know, basically at resistance, going to push lower. If the U.S. dollar index fails, is not able to get above these highs and actually fails and reverses, that is going to affect the markets as well. We're basically going to see, you know, that side long, you know, the stock indexes play out. So we're kind of at a key inflection point. That's all I really have. I think that's the most important relationship to look at going into next week. We had a really good meetup last weekend, and it went really well. We you know, had some new faces out there. We're going to be scheduling another meetup on the regular schedule for the last Sunday of the month. That's going to be the 24th. So in you know, in not next weekend, but the weekend after, the 24th of June, I'll be scheduling that on the meetup site. If you're linked up to that, check it out, and we'll look forward to seeing you there on the 24th. Good trading going into next week, and have a great rest of the weekend.